Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And for this week, well, it is the Crimson Harvest around Halloween, a regular event that comes back. I think there's a lot of competition out there. I actually tried finding some combat sites with my rattlesnake, but there were like rattlesnakes on almost every gate, golems as well. It was really busy, and so I haven't even really gotten any of those sites done up to this point, but we'll see. The event lasts until November 9th, so maybe, hopefully, things will quiet down a little bit later down the line and we'll have a better shot at finding the sites and getting some of those rewards. There should also be quite a few sales happening around this time. This is also something that CCP does quite often. Halloween sales are definitely a thing. And another bit of news that we got were the 2 ships for the Alliance tournament. So they are Mortus Legion ships, the special versions of those. Of course, I think the frigate looks absolutely amazing with those rounded golden armor plates at the back there. That's really amazing looking, and that should be 2 weekends starting next weekend, the 7th, and then the 4th weekend of the 14th. We should get the Alliance tournament. I personally do think that it looks pretty good. They made a whole post about it. They'll include like Twitch gambling, or Twitch predictions, I should say, with potentially some very cool prizes, ship models as well, EVE watches, other real life stuff. So that's very cool, and I think that this also sort of explains why CCP has been a little bit quiet lately on development news, although it's always other people that are developing the game, of course. I do think that they're putting quite a bit of effort into this year's comeback for the Alliance tournament. It looks pretty cool, so I'll definitely try and catch some of that as well. And see what it's all about. But prizes look amazing, and I think it'll be fun to watch it on Twitch and try to interact a little bit as well. Next to that, a bit of quick news on that as well. So they have announced that they're probably going to do a rotation of the Alliance tournament rewards now that they're at the 10th one, I think it is, or every 10 years. So they'll do like a rotation. So next year we should get the first rewards back for the very first Alliance tournament, which are some pretty amazing and unique ships. I think that's fair. I think that those rewards remain unique enough if they only come back once a decade. Alright, let's take a quick look then at the New Eden store here and see if we can spot anything. So the Headhunter skins front and center, same thing with the Malagrin Marshlight skins, obviously very much Halloween themed with the pumpkins and the skulls on the ships. The Oracle Headhunter skin looks really cool. That's a very nice looking one, very cool combination. Crewer and things like that also fitting very well to the Marshlight skin in my opinion. And then we've got those front and center. We got some bundles. Nope, that's just the bundle advantage. And so then do we get the sales on the services? So no, I guess you have to go to the website, because there is a sale for plex happening at the moment, which should have an impact on the prizes, but we're not spotting anything too special on the New Eden store, except of course for the return of the skins tied to or themed after Halloween. Alright, then let's move on to the market itself. We will start with plex and stuff as always, and that's coming in at 355. Like that, and there we go. A little bit of movement since I checked the prices, but sellers for plex are staying above 3 million ISK. There's a little bit more competition now. You can see that here in the Tranquility Trading Tower, and it is, you know, a comment that was made that I kind of want to mention here as well. It's definitely true that the fact that in order to get the very best taxes possible in GTAA that are very competitive with the player-owned trade hubs, you do need to get the skills and to get the reputations, which takes a decent amount of time and effort, and that is a disadvantage, you could say, for new players that do have to work on that hurdle if they want to do the best trading. And until then, they have to basically take the risk of trading in a player-owned station, which is of course very, you know, a little bit of like a reverse world. The more established players get the advantage of the GTA 4 trade hub and the best possible taxes there, whereas less less veteran players, are sort of stuck to take the risk of going into a player-owned station. But you need some rewards for, playing the game as well. So I don't know. I think it's still okay. It's taxes after all, so you can still sell and still get ISK for anything that you do in the game too. But it is definitely something that I don't think is often thought of when it comes to trading. For new players, you do need to invest quite a bit of time for the rep and for the and for the skills. So on the chart, we're still sticking below 3 million for the average price of plex, but you can see that sellers are staying above 3 billion as well. I think that the sale will bring in a little bit of extra supply that's putting some pressure on the price, but despite that, those average prices are not moving that quickly, and so overall I think that we're still at very expensive plex prices, but that the market may expect even more expensive plex prices after the sales are ending. The inflationary pressures, I think, are real if we look at the monthly economic reports that we've seen in the last couple of months, and then of course the fact that Q4 should be the end of scarcity. We also have more ISK, I think, flowing into the game now with the capital anomalies, the capital PvE content that has been added to the game. Overall, I think inflation is still a reality as more ISK is created than destroyed, and the taxes, they've changed, but they haven't become completely crazy either. So then we've got the multiple pilot training certificate that does the same thing after going above 1.5 billion ISK on the average chart prices, even the 5-day moving average getting above that price. We have a little bit of stalling. That's kind of normal. You jump by 100 million in a matter of maybe 10 days. That is something that needs a little bit of a break. It can't keep going up to the moon like that. There's some stuff in real life that seems to do that from time to time, but there's always a little bit of a rebound. So above 1.5 billion for the sellers and above 1.4 billion for the buyers of the multiple pilot train certificates. Volumes are down quite substantially though. Then we've got the skill extractors that should follow the plex prices quite closely, and they do. Today's average is in fact down below the 350 million mark, whereas most of the last week was traded above that range. We are talking 345 million for the first seller, getting up to 350 pretty quickly, and then 324 million for the sellers. A little bit of margin there all of a sudden. I think a little bit more than what we saw in the last couple of weeks on the upswing for sure. And so as a result, I would say that this is just the normal interaction. If you get sales happening on plex, quite a bit of that is going to roll on through the rest of the segment, like the skill extractors. Then the impact on the injectors. Here are the large scale injectors stopping their ascent as well, but staying above 680 million, so plateauing now at that 1-year high point. 691 million for the sellers, 600. Oh, and I should really take this out. Oh, it goes down to 660. All right, that mechanic is back after the tax changes. So 660 million for the sellers in the Tranquility Trading Tower, 691 for the sellers in Jita, and 650 for the buyers. So we'll keep this filter off so that we can keep an eye on the Tranquility Trading Tower as well. But the average price is basically flattening out above 680, which means that most trade is still happening in Jita 4.4. For the small skill injectors, interesting, still doing its own little thing, despite the fact that we should have a strong correlation with the large skill injectors. And these ones are moving above 140 million on the daily averages quite often, 138 for the sellers in the Tranquility Trading Tower, 144 in Jita, and 130 million above that for the first buyers. So this is still a little bit of upward pressure in the small skill injectors. I'm guessing here that this is basically more affordable and does something that sees a little bit more demand. You can, I think, see that on the volumes here as well. Yeah, the large scale injectors have been going down as the price has gone up to 1-year high point. For the small scale injectors, we've stayed pretty steady in volumes despite prices reaching those 1-year high points as well. Then we get the daily alpha injectors. That's actually surprisingly good. I think a little bit of downwards pressure could be because of extra supply. You can see that here as well, volumes going up due to sales that are happening at the moment. But in general, it looks to me like demand for daily alpha injectors, so activity for alpha clones is still quite strong. 48 million for the sellers and 43 million for the buyers. Now, a quick note, I think that the event for the data site is accessible for alpha clones, but that the combat site is not. At least I saw Marky Dragon run the sites in a rattlesnake, so I'm gonna assume that alpha clones will have a very difficult time soloing the combat sites. Let me know in the comments if I am wrong on that, but at least they can participate through the scanning with probes, finding the data sites. Those should not have any combat activities in them. But yeah, daily alpha injectors quite strong at the moment when it comes to demand. And then finally we get the hypercores that are also doing the same, stalling after bumping up above 310,000 discs for the average price. Quite expensive yet again, but now it's the sales, I think, that are just rippling through the whole segment. 315,000 for the sellers, and here Jita is still dominating the trade with 300,000 for the buyers, forced up quite heavily, narrow margin here despite the high prices. But the response, there is definitely lower volumes in the daily trades, which is probably, oh, that's something that's true as well. This jump will partly be explained as well by the tax changes, of course. Same thing with the lower volumes. So there is, of course, a disadvantage to having to pay higher taxes. That is that players tend to, need that bigger margin, and thus moving their products becomes a little bit harder. Next up, we've got the minerals coming in at 1135. There we go. Let's get started with titanium. Alright, still finding that new lower average price band, but seemingly starting to do so, and I'm gonna say 4 to 4.5 seems to potentially be that new band, whereas before it was above 4.5 and below 4.5. I think here this is where we will settle. You can definitely see the 20-day moving average start to straighten out and to find that average range. So at the moment we're up a little bit on the week for, let's see here, we do have to go to Jita for this one, 446, so almost 450 for the sellers. Volumes though, 700 million units, another 600 million units, another $500 million. It's definitely quite substantial. There's a lot of titanium available on the market. 427 for the buyers, decently strong demand here as well. So I would say that titanium is now currently trading at the upwards bound of what we can expect in the current situation, which is definitely a little bit lower than what it was just a couple of months ago. Then for a pyrite, we get kind of the same story. You can see that 20-day moving average staying above 17.5, around 18 ISK for most of the summer. Then we get the slump in September. I think just more activity, including a lot of new players that are finding their way into mining. A little bit of a difference is that 20-day moving average is slowly moving up right here at the tail end, but you can also see 5-day moving average, daily averages going below that at the tail end. So I think we're basically gonna stall that slight recovery in pyrite, and the new range is probably around 17.16 for the sellers, 16.74 for the buyers. That's a super narrow margin, right around that 17 ISK for pyrite. Then our third HiSig mineral, which is Mexalon, of course. Also still seeing a little bit of downwards pressure away from 60 ISK, so that's not very good news. We're talking 58 for the sellers and 56 for the buyers. That's again a super narrow margin. So I do think that the market is finding that new price range for these HiSig minerals, but unfortunately it is down in price, and so your ISK per hour for mining in HiSig has definitely been under pressure since the summer. Next up, we've got Isogen that did that very nice jump here again, potentially a little bit of tax reasons as well, but I do think that the story is still holding up, that we are pushing through the through the good old reserves, and we're able to stay above 80. I think for the sellers, a couple of sellers coming in at 76, a little bit more aggressive, but we're talking less than 2 million units. So this feels a little bit more in line with what you would expect, right? This top, maybe top 5, top 6 sell orders with what is, actively mined and then brought to Cheetah in order to sell right away. 2 million, a million, 1.7 million, 2,000, 27,000 units. That's way in a completely different range from where the prices are bouncing up against 85 ISK at 42 million, 50 million. Once we get through those, well, it starts to look a little bit more like what you would expect a low SIC mineral to look like in volume. So this is very good news. And then you can also see as we browse down, we get towards that 100 ISK pretty easily with a couple more big ones here and there. But and even a 50 million units at a 150. So I do think that the market is seeing this reality start to come through. And so now we had a big jump up to 80. And I honestly think that it's still not done. 80 is way closer to 60 than to 1100 for Noxium. And it is a low SIC mineral. So I think that Isogen, it will be a little bit of discovery with a bumpy road ahead towards what the actual average price is going to be. And the problem is, of course, that at the moment there's really no way to actually gauge what that consensus price is going to be, because demand side is changing as well. I think in Nosik they're still building up quite substantially. There's no real way to gauge current active supply. Because of course there's always someone coming in with another 25-50 million units all of a sudden. That's putting a stop to it, taking advantage of the current 1-year high price. But I think that this is just the start, unless of course CCP announces like Isogen flows opening up with the in Q4 with the end of scarcity. Then we got the Noxium chart, that's moving in a completely different direction. I think this shows that it's a different dynamic here. It is active supply and demand, and of course we're staying well above 1,000 ISK, which is such a big jump compared to Isogen for something that you're mining in a low sec. I think we are going to close that gap at least a little bit. Above 1,000 for the buyers and almost 1,100 for the sellers. And here these are the volumes that you would expect, right? 100,000, 200,000 units, couple that managed to scrape together over 1 million units of Noxium and bring those to the market. But so far not a single sell order above 10 million units for Noxium. And so yeah, take out those 50s, 25 million units orders in Isogen, and I think you're looking at a completely different situation. Then we've got Zydrine, picture perfect stability, slightly higher prices, big volumes coming in to take advantage of that. So this is bound to be very stable. 850 for the sellers, 800 ISK for the buyers. Healthier margin, I would say, here as well all of a sudden, which is a bit of a surprise for something that is dominated by importers, and thus they have the price setting power that's happening. To still see that kind of a margin is a little bit of a surprise, although it's only 5%ish. But yeah, 5 million units here, 4 million units there. Also, it feels a little bit different, and I think it is because we're talking bigger, more organized Nosik entities that from time to time will probably grab big piles of Zydrine and as part of their routes that they're doing to bring stuff in from Cheetah as well into their Nosik and buyers. They're selling some Zydrine as well. Same thing with Megasite, that's kind of up, but basically recovering back to just below 600 ISK, which is its normal price range. 590 for the sellers, 530 for the buyers. A little bit of margin as well. I'm gonna guess that there are some active suppliers here and there from different sources, maybe Wormhole Space, maybe Triglaven Space and things like that, that do dump to those buyers, being enabling that margin to open up a little bit. And then finally we got Morphite. Must not forget Morphite. I do from time to time, and I apologize for that. But we're staying below 75,000 ISK. 71 for the sellers, 66,000 for the buyers. Well, still very, very expensive. 7x what I'm normally used to seeing, and you can see even from the start of the year we've got a massive upswing. Started at 25,000, we're still 3 times that price range. So yeah, Morphite still very expensive. I think CCP, if there's a mineral that's likely to see more supplies, it would be Morphite, since that's still that much higher compared to its historical prices. High-sec minerals are actually down a little bit, especially titanium. Then low-sec I think is still in the catch-up phase, and null-sec is actually pretty cheap at the moment already, I think, compared to the historical Zydrine prices and Megasite prices. So I think CCP will be happy with those, but Morphite I think could, you know, use a little bit more of a shaving as well when it comes to its price range. Next up, we've got the PI market, 1940. There we go. Oh, there we go. That's gonna be better. Let's get started on these broadcast nodes. Okay, a little bit of a pullback here below 1.75 million for most of the last couple of days. 1.7 million for the sellers, 1.6 for the buyers. And you can see, unless we get quite a few, we actually do get quite a few buyers in Tranquility Trading Tower. We're gonna start to keep this one up, I think. Sellers, yeah, sellers dominated by Jita, 1.65 million, so that gap has been closed. I think this is also kind of normal. Where would most of the demand come from? Null-sec empires, where would they love to do trading, and they can take advantage of the Tranquility Trading Tower buy perspective. I think it makes sense economically to do it that one, although I think the margin has been closed quite substantially. So yeah, broadcast nodes seeing that demand into Tranquility Trading Tower, but being traded mostly in Jita, and a little bit of a pullback. Perhaps that's normal as well, as we reached 2 million just a couple of weeks ago, which was a one-year high point. But yeah, demand actually stronger than, well, actually we can't browse here, so perhaps a little bit of a slump in demand here. Let's see if this is also shown in the other advanced PI materials. Construction blocks definitely pulling back as well, went up to 8,000 disc and is being squashed. 7.3 now for the sellers, 6,700 for the buyers. I would not be surprised that what's happening here is the same thing that I've done for coolants. That is that stocks that have been piling up for quite a few months on these very low prices, and perhaps even a few years for some of them on these low prices, just, you know, take advantage of this sudden increase in price over about a month in a lot of these PI materials, and that this is actually squashing those prices. So consumer electronics, same story, right down in the last couple of days after going above 6,000 disc. 6.3 now for the sellers, 5.4 for the buyers. So this is just supply that has squashed those average prices. I think, yeah, they saw, all right, consumer electronics, people are actually able to sell above 6, let's dump it, and that is causing too much supply, so some people forced to dump to the buyers, and there we go. We've got this pullback. Coolants actually still doing okay, pulling back from a one-year high point at 11,000 disc, which is decent, but still not like a crazy price either, historically speaking, and is settling below 10,000 disc. 11 still for the sellers, but 8.8 for the buyers. So I think it's the same story with just some people, you know, that aren't going to compete with these sell orders, but just say, all right, 9,000 for coolants, let's dump quite a bit of that to those buyers, opening up this massive margin of like more than 2,000 disc between sellers and buyers. Cryoprotectant solutions next. Those are trying to stay below 100,000 disc, but creeping up above that. Well, for seller just below, but most at 103, 105,000 disc. 92,000 for the buyers though. So I would say if you still want cryoprotectant solutions below 100,000 disc, you can try that through a buy order. Enriched uranium, able to stabilize quite nicely, nice little landing at 8,750. That's not that bad. Most sellers are at 9,000 disc, 8,000 for the buyers. That's a more normal margin than what we're used to. So a bit more stability in enriched uranium, I think, just because it's harder to make. So coolants and mechanical parts, I'm expecting those to maybe have more violent pullbacks, because, well, I have hundreds of thousands of units still lying around, and I'm sure I'm not the only one. But for enriched uranium, harder to make, different types of planets. So I think here we're gonna have less of a supply flood all of a sudden. That's going to push those prices down. Integrity response drones also down a little bit on the month, but decently stable. 1.7 million for the sellers, 1.6 for the buyers. It's down a little bit. I think it's just more supply and then buyers that are dropping off a little bit. Then we've got the mechanical parts. You know, here's the other downside to 7K. That's where demand all of a sudden materialize. I think 6,600 for the buyers, 7,700 for these sellers, but definitely a little bit more violent again on the downside here for mechanical parts. I think just old stocks that come alive when they see 8,000 on the chart. Nanites able to stay above 5,000 disc, which is still not very expensive, of course. 5,000 for those buyers as well, seeing a little bit better demand, and thus again slower move down. Then we've got nano factories here, kind of showing advanced PI materials is struggling a little bit at the moment, coming down from that 1-year high point above a million. Almost 800,000 for the seller, 750 for the buyers, so that demand is stronger, but I'm guessing that some supplies are coming alive and bringing this down. Organic motor applicators staying above 750, 800 for the sellers, 775 for the buyers. Again, very narrow margin, but the price is not, making new highs or anything like that. Recursive computing modules, again, the October pressure after doing well to get up to 1.25 million on this chart. We are talking still above a million and above a million for the buyers. So yeah, that strong demand does exist price-wise, but I think that perhaps some new supply could open up a gap there as well. Robotics staying, well, 63,000 for the sellers, 61,000 almost for the buyers, so that's a narrow margin. Slightly better demand on this one, but historically speaking, this is a terrible price. 100k is my normal reference price. Self-harmonizing power cores, bit of October pressure again, able to stay above 1.5 million though, 1.7 for the sellers, 1.5 for the buyers, bit of a gap here on lack of demand. Sterile conduits, those went down quite substantially, probably a big volume glut finding its way to the market, but slowly making its comeback above 1 million. For the sellers, almost a million for the buyers. That's not bad. I think it does show that advanced PI materials, that there are basically bargain hunters out there for capital production that are ready to bounce when the price pulls back down too much. But at the moment, I do feel like things have slowed down a little bit on the advanced PI materials front, and so we are seeing a little bit of pressure on most of these. Ukomi superconductors is all of a sudden doing decently well, going up to close to another 1-year high point, 85,000 for the sellers, 79 for the buyers. Kind of wonder what you need that in. Some implants, the mobile tractor units, maybe the event is pushing, demand for mobile tractor units or something like that. I'm not really sure. But Ukomi superconductors definitely high in price all of a sudden, whereas most of the others are under pressure this week, such as the wetware mainframes went above 175 million, but not able to sustain, and I think we'll see that it's not that much demand compared to the supply. Yep, exactly. Still above 1.7 for the sellers, but buyers dipping down to just above 1.5 million. So a bit of pressure in PI, but I do think that advanced PI will not crater to crazy low prices. I do think that there will be opportunistic industrialists out there to pick up the slack there. Advanced Moon Materials next, coming in at 27.40. There we go. As always, we start with the carbides for Galente crystalline carbonate. A little bit of pressure again, landing nicely on 175, so I think the premium is still in, but the volatility is mostly gone. 177 to 163, that's a pretty narrow margin. So we are talking decently cheap prices, average for the last 6 months, but still a premium compared to before the industry changes. For Caldari, I think it's here, yep, titanium carbide, same story, a little bit of pressure going down below 200 ISK, so the volatility is completely gone out of this market, but 150 to 200, we still have the premium, that's a reality. 186 for the sellers, 180 for the buyers, again, pretty narrow margin, price has been kind of discovered, I would say. Then we've got Fernite carbide for Minmatar, again, volatility is just completely gone, but above 150 from below 150, so that's the same margin, 165 to 161, that is again narrow. And then we've got the tungsten carbide for Amar, Same bit of pressure, actually pretty much back at the same price before, but we again have to look, I think, a little bit longer than that. And those first 4 months, average prices 150 and below, and now we're getting to 150 and above. So it's exactly the same story with a 159 to 157 with very narrow margins between sellers and buyers in the carbide. So these have really found their price and have absorbed the industry changes that did cause quite a bit of volatility together with the war. Pretty sure that that has been an impact on this as well. But all of that is now gone, and yeah, we're paying a little bit more for the carbides compared to a year ago, which I think could be a combination of just monetary inflation, which is the reality of the new industry landscape in EVE Online. Then for the metamaterials, the story has been that these have been very stable over the full year, in fact. So we do have one photonic metamaterials bump here in September, crazy prices above 16,000 disk, but overall you can see we're right back on that 12,000 disk, if I can get that here, average, and you know, a bit above that, a bit below that, definitely a bit of an April bump as well with the industry changes, but to me this feels like a very stable, nice range, and so we're right back where we started, basically 11.2 for the sellers, 10,000 disk for the buyers. Also way more normal margin than the one that's you know, at the end of that volatility cycle for the carbides. Then we've got the Caldari one, non-linear. You can see here that its consensus price is 20,000 disk. We also have the March-April plateau, you could say, or April-May plateau, but overall we're right back on the 20k, 20,000 for the sellers, 19.3 for the buyers. That's, you know, again, normal margins. So this one really hasn't moved over the last year. And then someone is hammering outside. I hope it doesn't come through too much, but let's continue. Plasmonic metamaterials start at 15k, a little bit of premium here, but I think the pressure can continue. Same story here, April, May, June, a little bit more above 20k, but overall 17,000 for the sellers, 15,000 for the buyers, and it is decently stable as well. Then we've got terahertz metamaterials finally. Yeah, kind of the same, just below 15,000, landing on 15,000 with that April industry changes bump that exists in all of these. But overall, one of the most stable raw materials that we have in EVE Online, despite everything that's been happening with the industry changes, with the crunch in availability cycle and everything else. Then the other metamaterials, most of these had been suffering and were quite down in price. Fermionic condensates are able to maintain its recovery from the 1 year low point at 50,000 disk, 67 for the sellers, 58 for the buyers, bit of margin here, so I do think supply is putting pressure on this again. We're staying below average, but at least we're away from the bottom prices. Ferrogel, right, tried to crawl away, but is able to stay above 30,000, so to crawl back to 35,000 from again a 1 year low point. You know, that pressure is here, but at least we're at 31 for the sellers, 29 for the buyers. So we're not at 1 year low points, but we're definitely pretty cheap. Fullerites, kind of the same story, not a 1 year low point, but well below 750. That's a terrible price for Fullerites. 1,000 disk is my reference price for this one, and so we're slowly edging up from that low point again. There's really not much to say. That's gonna be the story here. Again, hypersynaptic fibers, you can see right here, 1 year low point touching almost 8,000 disk. We're back above 9.3 for the sellers, 8.8 for the buyers, but this is not a fantastic price or anything like that. Nano transistors still struggling again to stay above 4,000 disk. Phenolic composites, and I think it's the carbon fiber or the ceramic fibers. Yeah, the ceramic fibers, those had a very good April, June region again as well with the industry changes, but fully absorbed, and you can see here we're right back at 15 on the disk. So I think that all of this will be basically a nothing burger in the long term for the phenolic composites, which is still better than the other advanced smooth materials that are all trading below average. Our new ones, we can take a quick look, but I think that there's no news to report here. Yeah, very stable chart at their current price points, and then we get the ceramic fibers. Yeah, same story, 300 to 400 at the start of the year. Industry is announced. I think here there was a little bit of volatility and things like that as well due to speculation. The plateau up till June, and then the full recovery by the end, where we're back where we started off. So those are a little bit different from the others, but I honestly think that continued pressure could actually put us below average on these as well. Next up, the Tech 2 ships. Let's take a look at these. 34.15. There we go. As always, we start with the Basilisk, continuing the downtrend, starting to look potentially like a buy opportunity. Let's see where the buyers are at. 191 for the sellers, 181 for the buyers. Yeah, okay. I think if you can compete close enough with these buy prices, that it would make sense to buy a Basilisk. I'm honestly still in the same mode. Last week there were a couple where we had at least the first signs of volatility potentially coming back to this market, but I'm still not sure, so I would say looking for the bargains for the longer and the medium term. Here, Basilisk, buy as close as possible to 180. Looking on this chart, that makes total sense. So at the moment we're also in the pressure phase, so I would say you have your best shot right now to try and grab a cheap Basilisk, and it would make total sense to me, but again, not to then sell at a profit next week, but for the longer term. Maybe with the Alliance tournament that could make sense as well. I'm not sure if Basilisk is allowed, but if it is, that could make sense as well. Then we get to Cerberus, a little bit late for that one. We did touch the 200 million on the chart. I'm not sure if I said that this was a buy opportunity on that one, but you can see the bump up. 230, 240 million almost for the sellers, 226 for the buyers, so these are forced up as well quite strongly. Yeah, so at the moment you could probably, if you bought well below 200 million, you can sell at a profit right now, but it's also not as good in volatility as what we would honestly like to see. Then we get the Guardian. That one had this buy opportunity that I definitely mentioned, and you could have bought them, I think, below 180. Yeah, for sure. I think close to 170, 175 must have been possible, and now you're selling at 187. It's that warning, right? This is materializing. You have a little bit of volatility, but it's not enough to really make your trades shine. So I would say I would personally hold on to a cheap Guardian that I have bought, although you get a slight sell opportunity right now. And so you're too late to buy for the Cerberus and for the Guardian for sure. Basilisk may still be in that spot. Then the Hound dipped below 22.5. Yeah, despite the lower volumes, you can see that I think buyers will have gone up. 22 million for the first one, 25 million just below that for the sellers. So this is what I was afraid of, right? This looked really good on the downside here, right? Going for like 27 million down to 22. You could have probably bought well below that, close to 20 perhaps. At the right time. Now looks like, all right, nice opportunity. 7 million, 7 million should be possible, but yeah, the bump just isn't going as high as where we come from. So I think we'll need a little bit more time for really those volatile trades to come back. Ichthyorsa for the Triglavian situation, stable at the current price, still 600 million, 650 for the sellers, 610 for the buyers. Not sure if Trig ships are in the Alliance tournament, but that is something, right? Next week, the week after that, if you can discover the meta of what will happen in the Alliance tournament, potentially there are trades to be made there, but that's a little bit more akin to gambling or to insider trading, which is perfectly legal, of course, in the world of EVE Online, but I don't have any information on that myself, but it's something to perhaps keep in the back of your mind when it comes to potential trades at the moment. Then we get the Ishtar, same story. Early October we had this opportunity to buy very low, well below 200 million, buyers up to 190, 194 for the sellers, and so this is the comeback. This is really not very tradable just yet. It's not the volatility that we saw, for instance, here with the April announcement for the industry changes. Definitely a little bit of gambling on that as well, but yeah, from 200 to 280 to above 250, that's tradable. That's a 25% jump. These aren't happening at the moment. Next up, we've got the Manticore, slight pressure, definitely down on the average prices towards 25 million, 24.5 for the sellers, 26, so that's way too narrow a margin again. Honestly, it is more supply, but unless we crash down substantially and really break this bottom, for me, that's still a no. Then we've got the Munin. kind of the same again, right? Staying well above 200, 196 for the buyers. That's a narrow margin. Yeah, that's not too good. The Nemesis was under pressure and is under pressure right now, back again below that 22.5 million. For the sellers as well. The buyers though, 21 million. Look at how aggressive these buyers are. If they would dip below 20 million, that would to me be a buy opportunity. At least you'd have a 10% margin between sellers and buyers, plus on the buy side here. But despite this lack of demand, they're very aggressive still. So yeah, and maybe, but I don't think we'll have enough momentum to go even lower and to really break towards the previous low points, touch 20 million on the chart. That's when you buy a good deal, and that's what I would love to be able to purchase, but it's just not happening that often. Dioneros, a bit of pressure as well, back below 180, yeah, and 170 for those buyers. Yeah, maybe, but again, less than 20 a day on average, so you can buy one and then I would stop. Then we've got the Panther for the costs. All right, staying below or close to the 1.1 billion, yeah, just below the 1.1 billion, showing a bit of pressure. 1.1 for the sellers, just above a billion for the buyers. Next up, we get the Purifier. That one did break down to a buy opportunity. I think you could have bought below 20 million. Starting to make its way back up, but I think it's 25 for the sellers, 21 million for the buyers. So you can sell, you can get a little bit of profit if you manage to buy below 20 million. Well, what would that have been here? At the very bottom, like last week, right? Keeping an eye on that. I think the Purifier went into buy opportunity. Not exactly sure anymore. You get a small trade, but again, we would of course love to see a 30 plus sell price rather than what we're seeing now. And so this is my warning. Honestly, I'm just still bargain hunting, hoping for some really cheap prices, and then I'm holding on to those. Then we get the Scimitar next, still staying below 190. That's, to me, it's the same story. 180, this one is buying 20. If we could get rid of that one, buy one below 180, that makes sense to me. Then we get the Widow, showing that same pressure, just above a billion, just below 1.1 for the sellers, just above a billion for the first buyer. Showing a bit of pressure, so I do think that if this continues, which we're not sure of, but if this continues, that you will see more bargains show up, like what happened with the Purifier, what happened with the Ishtar, what happened with the Guardian. So I do think that they will show up, but it's that same warning. Don't expect the next week, the week after that, sell at those nice profits. That's not coming at the moment. And then here we get the Zealot, did jump up to a price of, let's see what we got here, 220 million, and here in September you could have bought well below 180, so that's like one potential trade. It's a little bit of volatility, you know, almost there, but still definitely not. 212 for the sellers, 190 for the buyers. Definitely not the range you want to make a move on the Zealot, but overall here, yeah, kind of the warning. There's slight buy opportunities that are happening here and there, but the volatility definitely not. Then the Tech 3 ships coming in next, coming in at 42.35. And there we go. And let's see, still the same story for me. Confessor staying below 50 million, but hovering at what I would consider to be a pretty high price. 51 for the sellers, 45 million for the buyers. Supply wise, last week, yeah, some ships coming in, there's decent supplies, but nothing too special that's gonna crash the price down either. I think the Hecate had some room, did drive a little bit of supply, I think, to crash the price down below 50 million finally. I mean, that feels like a crash, but it's still very expensive, of course. We're talking 49 million for the sellers, 47 for the buyers, and look at that, last 2 days, 100 here, 20, 20, 20, so that's quite a bit of supply over the last week. Should have driven a little bit of supply out of this vehicle, but I still don't know, of course. Here's then the Jackdaw, also down to 45 million, very, very sharply. 45 for the sellers, 43 for the buyers. Look at the supply here again over the last week, 150, 85, 56 down here, all of that But is this production or is this just stuff that was still lying around? Let's see what this Vapel is doing. I tried to buy one on the downside. Finally we get a bit of a bump. It's still shallow, it's not what I would have expected. I honestly thought we could go above 45 million. Well, we are there. 46.4 for the sellers, 41 million for the buyers. So it took a very long time, and it's not as good as what I would have hoped for. But if over the last couple of months for this Vapels you followed that story and you said, all right, buy the cheapest one, you have an opportunity now to sell above 46 million, which I think should be like a 10% plus easy trade compared to the good buys that you managed to do. And compared to last week, I think, you know, if you bought there, do I have my buy order up? Yeah, I tried to buy for 39 million including taxes. I'm not sure if I actually triggered that. Suspect not. Let's see if we've got a buy orders here. Yeah, I suspect not. I may have been the catalyst as well with my buy order being a little bit aggressive all of a sudden to signal the turnaround. But yeah, if you manage to buy below 40 million and you can now try to sell at 46 million, you've got that trade that did finally materialize. But yeah, not as good as what I thought, right? I mean, we're still talking Confessor almost 50, Hecate just below 50 and spent the last couple of months above 50 million. Jackdaw, same story, very sharp drop off on a lot of supply, and despite that this Vapel just cannot make a move, any significant move here. So yeah, kind of disappointed in that. I think this will be the end of the story, because all of that supply now that's still available for Hecate and Jackdaw is going to push the Confessor back down as well, and then this Vapel making its way to 45 for the least popular one. We're right back where we normally expect Tech Tree destroyers to be. Get a small trade here, but yeah, I thought we'd see better times more quickly basically for this Vapel. I thought here that we could do a jump towards 50 million on a little bit of buying. It just never came. Unfortunate. Next up we still have our cruisers. Here is the Legion 180, feeling kind of affordable on this chart. Yeah, below 180 for the sellers, 167 for the buyers. For trading, honestly, I wouldn't gamble on it. Low-key getting back to an above average price, but yeah, 200 million for the sellers, 185 for the buyers still feels reasonable. For the most popular one, Proteus, making its way back to 200 million as well. All right, 202 for the sellers, 176 for the buyers on a lack of supply. And that's the real question in this market always, I think. Is this like a Nullstick Alliance that said, all right, we get cheaper Protei, let's buy a couple hundred right here, or close to 100 of them, due to the current low prices? Or is this pure manipulation, someone with a big enough wallet? And honestly, 100 Protei is not that much of a problem, as that's something that can easily happen here. And then we get the Tengu finally stabilizing below 200, 199 and 182. Perhaps that Proteus bump could also be the event. That's possible as well. Tech Tree cruisers will be pretty good for the combat sites as well, I imagine. But I prefer a Tengu, so why the Proteus? Well, who knows? Because it's cheap, maybe. That's it for the Tech Tree ships. And then finally the extra products, keeping it easy this week for myself, 47.30 for fuel blocks. So there we go. Kind of want to see what's happening here. Alright, very interesting chart, I would say. Look at that April bump here. That meant a full plateau throughout the summer. And then here in September, we've got a big decline after the war as well. So I think here we got a final jump on the rebuilding of the Imperium. Having to put up a lot of structures and restarting them does take a little bit of fuel. You do have that upfront cost that you have to pay, but now we're right back in the 20k where we started off last year. And so all of this was also due to, well, we'll need a lot more fuel for reactions and everything with the industry changes. So we went to 25,000 for most of the summer, but we have basically completely normalized. Hydrogen fuel blocks, same story. Lovely April dome right here above 25,000, a little bit of a August final bump at the end of the war, and then fully normalized in 2 months back below 20,000 ISK. Nitrogen fuel blocks, exact same story, and then oxygen fuel blocks, exact same story. A little bit perhaps of a later bump here in August, September, but overall that is the story for the fuel blocks, which does mean that if you are looking to start your structures, I mean, I think you're still at risk because the cores are just incentive enough to ward you and to go after your structures, but at least your fuel cost has normalized quite substantially. So if you can find a place where you're off the radar and where you can then do your own stuff on the structures, which is something that perhaps I'm considering. I'm still not sure what I want to do at the moment, honestly. Kind of depends on what CCP announces, I think, in Q4. But your fuel costs are down quite substantially, volumes are up as well, so I think availability will not be a problem, which is good news as well for industrialists. That should cut down on your costs as well. And then maybe a quick note, be careful out there if you are moving stuff, because of course it is the Halloween period, that's a spooky period, and drops in PvP, including ganks of course, have gone up to 90% drop rates, so you are all juicy targets once you fly anything of value. So be careful out there, fly safe everyone, thank you very much for watching, and as always, I'll see you next time.